Hello and welcome to TalentSprint again for a video presentation on the type of loans given by a bank. We have already seen the primary functions of a bank is to accept deposits and give loans. One of the primary functions is to give loans. Now let us understand what are the different types of loans that are being granted by a bank. The first type of loan which is granted by a bank is that of an overdraft. Then you have a cash credit. Then you have demand loans and term loans. Then you have gold loans. Then you have mortgage loans. So these are the different types of loans granted by a bank. First you have the overdrafts. Then you have the cash credit, or in other words the working capital credit. Then we have the demand loans which are repayable on demand. The term loans which are repayable at the end of a certain period or the end of a certain term. Then we have gold loans, which is of course granted against the pledge of gold ornaments and jewelry. And then you have the mortgage loans, normally more in the nature of housing loans and so on. So these are the different types of loans which are granted by a bank, and the nature of the loans depends on the purpose for which it's given. As I told you, the nature of the loans depends on the purpose for which they are given. A cash credit is given for the purpose of meeting working capital requirements. An overdraft is given for the purpose of meeting temporary requirements of credit for the borrower. A term loan is given for the purpose of a long-term loan relationship, for example, for the purchase of machinery. That is, machinery may cost a few lakhs of rupees. It cannot be repaid by the borrower within a 1-year period. So normally these loans are given for a 5 or a 10 or even 15-year period. That's called a term loan. And of course, a demand loan is that which is repayable on demand, normally within a period of 1 year. Then you have gold loans, which are purely meant for the purpose of pledging gold ornaments and jewelry. That is called a gold loan. And a mortgage loan is type of which is given for a very long-term a very long-term time in nature. So the purpose of the loan determines the type of loan which will be given by a bank. It also depends on the tenor of the loan. So the type of loan will depend not only on the purpose of the loan for which it's given, but also on the tenor of the loan. Tenor means the period. An overdraft is granted for a very short period, namely maybe a week or 10 days or 15 days to a month or maximum 3 months time. That is called an overdraft. A cash credit is normally given for a period of 1 year, renewable at 1-year periods thereafter. And then a demand loan is normally given for a period of 1 year. And a gold loan again is given for a period of maximum 1 year, renewable for a 1-year period of time, subject of course to a maximum of 3 years at one go. And of course, a term loan is given for a very long period, namely 10 years or 15 years. And of course, a mortgage loan is one which is of a very, very long period, namely 20 years, 30 years. It could be a housing loan which can be repaid in over a period of 30 years. So the type of loan depends not only on the purpose of the loan, but also on the tenor of the loan. And of course, the type of loan will also depend on the security given against these loans. So the type of loan could be dependent not only on the purpose for which is given, but also on the tenor of the loan or the period for which is given, and also on the type of security that is offered as the loan. For example, an overdraft is normally a clean overdraft, in the sense that there are no securities given against that overdraft except perhaps the guarantee of a third party. That is the type of security offered for an overdraft loan. For a cash credit, the type of security given is that of raw materials, finished goods, semi-finished goods, or receivables. All these are normally expiring within a period of 1 year. So that is why the cash credit loan is given for a period of not exceeding 1 year. A demand loan again is that which is repayable on demand, and the security normally given is again a pledge or a hypothecation, and also the guarantee of a third person. A term loan, on the other hand, is a pledge of the machinery given. The machinery given, that is the machinery is the given security for a term loan. And in the case of mortgage loans, the security given is the mortgage over the property or the house with which the loan is bought. So the types of loans are dependent on different aspects: the period, the purpose and the type of security which is offered as a loan. So this is a very brief introduction to the types of loans which a bank offers to its borrowers. And of course, this video was just to introduce you to the type of loans. In the following videos, subsequently, we will discuss on each of these type of loans. We will discuss what is an overdraft, we will discuss what is a cash credit, we will discuss what is a demand loan, we will discuss what is a term loan, and we will also discuss what is a mortgage loan. So this is a very brief introduction on the types of loans which are granted by banks. And so until I see you in the next video, is bye from me for now. I hope this short video was useful for you. Thanks for watching. Bye.